welcome to the channel. Hope you guys are having a fantastic day. Today I'll bring you another stock that you should be adding to your arsenal and your watch list. The reason I say this is because we're going to go through the technical analysis from the day it launched in 1998 till today, and how it was through different weathers, where the stock market dropped in 2008, you had 2011, 2001, 9/11, and the stock is holding on pretty good, right? So if this stock goes on a discounted price after the recession, that's going to eventually kick in with the Fed's rates going up, which I did make a video about 2 days ago. You could check that video out as well. The rates are going to go up. Recession is going to kick in. If this stock goes on a discounted price, which means it drops in value, I would say this will be definitely a guaranteed buy, and it will return you the money, after it goes back up, right? So we're going to go through the technical analysis. Let's look at the company that we're talking about. Is the Brookline is a company. It's a bank company. It's a bank, right, from Rhode Island, Massachusetts. They had about $8.6 billion in assets. So it's a very, very big company, right? It's not a small company. $1.3 billion as a market cap, 905,000 volumes. They daily trade on the stock market. So it's a great company, and I'll show you guys what the institutional banks are holding on, like how much shares, how much percentage they own on this company, all right? And that's a great indicator as well. The stock is going to be good, and what you need to watch out for is a discounted price, right? So for example, the stock right now is rising steadily from past few weeks. The stock is at about $17.35. All right. So I'm going to go to monthly chart for a quick monthly chart and show you guys where the stock was before, and how is this fluctuating with the economy. But the stock is still coming back up and holding on to its value when the market is, coming back up. Right. So stock launched in 1998. The original value was $3.94. And then the stock 2011, even the 9/11 happened. The stock was surging, it didn't drop, it went all the way up. And then I think it's 2008 or so, when the market started collapsing, because the whole banking system, as you know, right, with the mortgage-backed securities and things like that, with all the bonds they had for more mortgages, bonds, that the whole scheme that you guys know about, 2008. Anyway, the market crashed, it went down to $4.33. Everybody was having a bad time that time. Now, with that, right, stock then it started rising, after 2014 or so. Started picking up, went down to $18.93 in 2018, dropped a little bit again, dropped it to $8.14, and look where the stock is right now. Okay, again, $17.35. If you look at the, let me zoom out again real quick. 2005 stock was at $16. 2022 the stock is $17. Right now. That's a long-term portfolio stock, okay? If you're looking for retirement stocks, okay, you want to be in a position where, companies like this, okay? Anyway, so if the stock goes on a discounted price, and right now it's uptrending, let me go to daily chart real quick. I was on a monthly chart, so I want to go back to the daily chart now. Let's see what the daily chart is saying. All right, you see, right now it's on the vertical lines. It's parallel lines. It's staying in that range, okay? This is your support on the bottom right here. This is your resistance, and it's going to fluctuate between that. If it goes down, right, it started going down to like $15 and maybe like $14, it's definitely a buy, because eventually, as we just saw, that stock will hold its value, and 200 moving averages are holding on true to that as well. So let's add other indicators and see where we are with that. So I'm going to add MACD, which is MACD is your, if I can find MACD real quick, sorry, MACD is your moving averages, conversion and diversion, looking at the short length and the long length. Brown line is your MACD, and the short line signal line is what the system is anticipating. Looking at this, it looks like price might fall, because, if MACD is crossing upward, that means the stock is going to rise. If it goes downward, the stock is going to fall. And you already know the histogram. Red means that people are selling out. So right now, it'll be interesting to see tomorrow, because I'm on a daily chart. It'll be a few days. It'll be interesting to see a few days. If it crosses down this resistance line right here, 1704, you could definitely see it dropped. And if it goes on a discounted price, which means that it goes down to $14, $13, or $8 for that matter, definitely a good buy. Okay, keep that on your watch list. RSI is the relative strength index, and see what, if anything above 70, which means there's a massive buyout happening on that. If it's anything below 30, which means a lot of people are selling the stock. Right now, the stock is 55, which means that it's like everybody is like in the middle ground right now. What will be interesting to see will be in a few days You guys look at MACD and RSI. If it both are going down and it goes below 30 or about 30, get that. Okay. After that, it's definitely going to go up, and you can sell it and make some money on that as well when the recession kick in. All right. So that's for the MACD and RSI. Let's go to Nasdaq and see what Nasdaq is holding on to this. 81% of the stock. Okay. All right. That's a strong indicator that institutional banks has the maturity on the stock. Okay. Majority. Right. So they might as well be shorting right now, where you can see probably these spikes you can see, right? They might be shorting it because they already know the market's going to fall. They might be pumping up the price. People buy it and they sell the shares. When the stocks goes down, they buy it again and they pay to the broker. So with all being said, with the institutional bank holding on to 81% and the stock is rising, I would wait for the stock to fall, go down. As we just talked about, that if it falls down, it's going to go down to at least the next resistance, which is $14. And if it falls even further, which is even great, because then you could get it on the lower price, buy the dip, sell higher. Usually what happens is you buy the dip and the dip dips again. That wouldn't be the case here, because you already know what the resistance is. Either it's $14, it's $13, or it's $13.09. And even if you go a little further down, and if it keeps falling, you can always see the next resistance. And I think even if at $11 or $13, it'll be a good buy, because it's definitely going to go back up, because the stock history is showing that it's always picked up after a few days or a few weeks or a few months. So it's a long-term buy, but definitely should be adding to your watch list. So hope you guys like this video, and I'll be making more videos like this. So thank you for watching.